Hey everybody, this is Rob Keens with Gold Silver Pros. I have a returning guest on the program. It is Brien Lundin, who is the publisher of the Gold Newsletter, as well as the producer of the New Orleans Investment Conference, which is going to be coming up here again in October. Brien, how are you doing today?
Doing great, Rob. Really happy to be back with you.
So happy to have you on again this year, and it's because we always have a great conversation on what's going on in the markets and what drives the markets, especially the Fed and other factors. We talked a little bit last year about what the outlook would be for the Fed for 2020. I want to bring you back on to talk about what we see for 2021. What are your thoughts there on what they may be doing and how that may be playing into what the markets are reacting to?
Well, the big change, of course, is we've seen the Fed starting to float some trial balloons about eventual rate hikes, perhaps from some of the FOMC members, some ideas or thoughts about tapering, quantitative easing, which I do expect them to do given the inflation rates we're seeing. I do expect them to start tapering back QE in the September-October timeframe. And they are, again, talking about or thinking about raising rates at this point, 2.5 years in the future. The market didn't take that well initially, but it seems to be absorbing that. I am a bit cautious on the metals right now as we go through this transition into tapering over the next few months. So I'm kind of, hesitant to really get back in the market right now. I think we have the potential for some volatility as we get some more trial balloons floated out there by the Fed. But that's the big difference right now. We have to get through this difference, shifting in messaging, the massaging the message, as it were, that the Fed is about to do and is doing right now.
Yeah. In terms of precious metals, I know June is typically one of the worst months of the year for them. It seems like it's, the sell in May and go away phenomenon and just not the strongest month. Do you think the tapering potentially could affect that as well and kind of extend out the doldrums that gold and silver may have over this summer?
It could. The last 2 years, we didn't get that typical seasonality in the metals. And the typical pattern that we see is that gold and silver bottom hit the worst of the summer doldrums, usually in the mid-July to mid-August timeframe. And that's one of the things I've recommended my readers kind of play that factor and get involved in the market somewhere around the end of July, because in a good market environment, if you get into some good juniors in particular, you can get a 10 or 20% jump on the rest of the market on what is typically, a fall rally or early fall rally. So we haven't seen that the last 2 years. We've seen actually anything but, and in fact, we've seen strength in the summer rather than summer doldrums over the last couple of years. This year seems to be playing out according to the more historic pattern. I think that actually works in our favor as an argument against this taper talk and the like, bringing in some weakness. It may prolong it a little bit, but we have a bit of a rally going off of the bottoms off after that big sell-off in June. So I'm enthusiastic about that. I'm somewhat encouraged about it. Still, I have this kind of, I'll believe it when I see it attitude. I want to be a little bit hesitant, a little bit more cautious. One of the keys that I see is that gold has achieved technically a golden cross with the 50-day rising through the 200-day. Mitigating that is the fact that the 50-day may be rising shallowly, but the 200-day is still falling. So that kind of mitigates that factor. Also, as we speak, the gold price hit that 200-day moving average and reversed right off of it. So we'll have to see if we can surmount that key level. Now resistance at some point in the days just ahead.
Yeah. And looking at some other factors, I was just reading a Zero Hedge today, how Yellen in a press release indicated that there might be another shutdown coming due to the Delta variant concerns, also kind of using a little bit of her Fed background to talk about worries about inflation and also some other things going on in the economy. Do you think we would, if we got to another shutdown period in the economy, it would be bullish for gold and silver, or how do you think the economy would react in that case?
I think it probably would be bullish in that it would put off any Fed action on tapering and or rate hikes even further. So that would be bullish for gold. It's really been interesting over the last 3 weeks or so in that the 10-year yield has actually been falling, even as the Fed has been talking about hiking rates or thinking about hiking rates and talking about tapering. And as the dollar index has been strengthening. So that's been a bit of an anomaly. You wouldn't expect that. And I think that the reason behind that is precisely what you alluded to, the fact that we have that Delta variant out there that's much more contagious than the other variants. And it's having a particular impact overseas. So you combine that with that fact, I think the bond market is kind of sniffing out potential impact behind the Delta variant, beyond which, beyond what most people are even talking about. So then if you look at that, the fact that that's having more of an impact overseas, particularly in Europe, and you look at the fact that inflation rates have not yet risen as much in Europe and growth hasn't really been seen in Europe as much as the US. And that kind of explains the interim dollar strength. I think both of those actually bode well for gold over the future. Like you say, if there is another shutdown or some impact from this Delta variant, that's going to be really tremendously bullish for gold, because it's going to extend, all those factors that led to a very strong gold price over the last year and most recently.
Yeah. I wanted to turn attention over to inflation here for a moment. We've been covering inflation since the beginning of the year because we saw the commodities indexes start to spike beyond what they were pre-COVID, but also dating back to 2016. So we saw a 5-year pattern broken in the commodities prices that led to higher producer price indexes, and then eventually to inflation in the economy. We've now had 3 straight months of fairly high CPI prints, including the one that came out the 13th of this month. Do you think longer term, in terms of inflation, it's going to hurt the economy? Because today I saw some news that people were complaining about the prices of autos and houses being too high. Do you think that's going to slow down some of the production that we've had, or potentially the buying from the consumers?
I think it may actually accelerate buying from consumers. What's happened is we've seen, literally, as you make a wonderful point, because today I believe it was the University of Michigan Consumer Sentiment Report came out. And for the first time, we saw higher expectations of higher inflation among consumers has really had an impact on consumer confidence. And the Fed's big fear is that inflation gets anchored in the consumer consciousness. And what happens is the consumers begin to anticipate higher prices, so they buy more now. They accelerate their purchases, and that tends to accelerate the inflationary factors, the inflationary trend itself. So that actually would be a boost for inflation expectations, lead to higher price increases, and really a public's willingness to buy now and accept higher prices down the road.
Do you expect, beyond tapering talk, let's talk about higher inflation, the Fed may be getting involved in raising interest rates. Do you think they could potentially raise interest rates at all this year if we continue to see this high inflation?
I don't think they're prepared to. I mean, we would have to get a very strong inflationary spike, which I don't expect of that degree. I expect that higher inflation is not is much stickier than the Fed has been talking about. Yes, there have been supply chain issues, and there are a number of things in the CPI, number of assets and prices in the CPI that are higher as a result of these supply chain disruptions. But there are a lot of things that aren't. Wage hikes are coming down the road. Those are not transitory. You can't take those back, and they tend to accelerate as well along with inflation. You have some of the key commodities, as you mentioned, like copper prices have been really, really strong. I think over the next 5 years, we're going to see copper prices double from these record levels. That's the kind of a trend that was literally over a decade in making, and it's going to be over a decade before you can get more supplies in to meet these higher demand, that growth in demand. So it's going to take many years of much higher prices in a lot of these commodities to resolve what are really secular supply-demand imbalances.
So it's interesting you mentioned the commodity cycle and the mining cycle, Brien, because it does take a long time to find assets, locate assets, put the investment in, get them out of the ground. Where are we in terms of investments in mining stocks? Because when I look at the data, I don't think we've fully recovered from 2011, the previous highs, where you had a lot of money coming in because gold was rising, and gold tends to lead, resource investment. we've had some nice, recently some nice additional money come into the miners, but it seems as though they're still lagging the overall gold and silver price. At least that's my read. What's your read on that market?
Well, they up until about a month ago, they were dramatically undervalued in terms of the metals prices. Then we had that big sell-off in June. So that undervaluation was solved a bit, not so much by the miners rising in value, but the metals coming back toward the miners. So it's not as compelling of a story as it was then. I think, though, it is still a compelling story because we are in a secular long-term bull market in the metals that's based on monetary factors. It is the kind of a classic bull run we saw in the early 2000s, the late 70s, the early 70s. And we know that the mining stocks are going to outperform gold in that kind of environment. We know that silver is going to outperform gold in that kind of environment. So I'm very bullish on those long term. Right now, I'm a bit hesitant. Again, I'm cautious about jumping into the market because I'd like to see gold establish a bit more of a consistent uptrend here, get back through some key levels before we jump back into the market. That might be a contrary indicator that now is the time to buy, but right now I'm a bit hesitant. And we'll know more, I think, in a couple of weeks if we can get past some of these key levels in gold. But yeah, the commodity trends, gold and silver, along with copper, along with really the entire base metals complex, suffered from over a decade of underinvestment in exploration and development. And as well as I do, it takes about a decade to get projects from discovery into production. And there's not a lot in the pipeline right now. So we are going to have a crunch from that standpoint where the supplies just can't meet what I perceive to be really strongly rising demand across the entire spectrum of metals.
Yeah, I agree with you. It seems as though with the Belt and Road Initiative, China is banding together with a lot of other countries to build trade routes and they want to build their middle class. Their goal is to get their middle class up from about something like an average of 45,000 American up to higher levels so that they can, compete as more of an independent economy rather than being so dependent upon United States trade. So I think the long-term demand for the commodities is going to continue to increase. And I think in terms of gold and silver, my read on that is that we're probably maybe at the early stages of the next big bull market cycle. I want to get your thoughts on that. Do you think that gold and silver still have a long way to run? Do you think we could reach all new price highs in the next few years due to all the macroeconomic factors, or where do you see this going 2 to 3 to 4 year time frame?
Yeah, I couldn't be more bullish over the long term and more confident over the long term that the metals not only will be, but have to be. They have to be much higher than they are right now. The timing, of course, is always the trick. But if you look at time frames measured in, say, 5 years or so, then I think you're going to be on the right side of the markets, the right side of history, as it were. And if you look at some of the rough comparisons of what happened in previous bull markets, if you look at what happened in, say, the early 70s to 1976 timeframe, or actually 1974 timeframe, and then the 76 to 1980 timeframe, then the 2000 to 2011 timeframe, you see that the gold price in particular in each of those instances has risen by about 7 to 8 times in value. If you look at the bottom for this cycle, which I put at around $1,040 thereabouts in 2015, then you're looking at about $8,000 gold before this cycle is finished. And then there's the question of what is this cycle going to be? Is this going to be the last boom bust cycle for the dollar, as say Peter Schiff would maintain? Or is it going to go through another cycle as the dollar and really all fiat currencies begin to lose credibility? Who knows? But we know what the trend is, and we don't know, and I don't pretend to, although a lot of people do, know the precise path we're going to travel to get there. The one thing I do know is that you're going to want to own gold and silver and really good mining stocks to leverage those gains along the way. Gold and silver primarily as wealth insurance, mining stocks and the like to leverage this secular trend.
So I know that you have the New Orleans Investment Conference coming up. It's a wonderful conference. I love attending it. It's a wide-ranging set of speakers and investment topics for people that are interested in the markets. Can you talk a little bit about what you guys are doing this year and when you're having it?
Well, the first thing we're doing is getting back in person. So, there's going to be a lot of handshakes, hugs, hellos in person, and finally, and it's been a long time coming. So the reaction that we've gotten throughout the industry and from investors is that they can't wait. So I think it's going to be a big blockbuster homecoming, as it were, for gold and silver bugs around the world, and everybody's excited about it just from that standpoint. So to add to that excitement, I've kind of pulled out all the stops in terms of a speaker roster. Just went out and got everybody who's, not everybody, but most of the people who are my favorites in the industry. There are very few that I missed out on so far. And we packed the agenda from wall to wall with just extraordinary people. We've locked in Ron Paul, James Grant, Jim Rickards, Danielle DiMartino Booth, Jim Iorio, Doug Casey, Rick Rule, Dave Collum, Dominic Frisby, Tavi Costa, Lawrence Lepard, George Gammon, Brett Johnson, Peter Bookvar, the real estate guys who've really helped our conference in recent years a tremendous amount. And the list goes on and on, dozens upon dozens more, just about all of the best newsletter editors out there. A big focus on metals and mining, but as always, we're going to cover geopolitics and and the economy and everything that drives the metals markets.
Yeah, we're looking forward to it. We're definitely coming down to the conference this year. I'm actually going to try to bring some of my team as well. A lot of them are learning the finance space, and I told them this is probably the conference you want to be at because you're going to get the widest ranging information, probably the broadest set of speakers you're going to find at most of these conferences, most of which tend to focus on narrow topics, but I think yours tends to be broad enough that people can learn, regardless of where they're coming from in their investment career.
Yeah, and Rob, just make sure we communicate, and we'll put you on Media Row if you'd like to, and you can get lots of content and interviews with our speakers, and really even our attendees. Our attendees are some of the smartest people you'll find anywhere. Like I like to say, they've proven they're smart just by showing up. So that if you're sitting in the audience at the New Orleans Investment Conference, you're getting great advice from the stage, but if you look around you in the audience, you can't find a group of more successful, insightful, and helpful investors out there. So there's a wonderful sense of community that we have at the New Orleans Conference. And I urge all of your listeners to go to our website at neworleansconference.com, check out our agenda, and hopefully secure your space this year. It's going to be an incredible event.
I do too. I think after the shutdowns, people have been itching to get back to physical conferences. It could be an explosive one for sure, which is why I definitely want to be there. Thank you, Brien, so much for joining the program. Great to have you back on. I know it's been a year since we've had you on the program. I'd like to have you on a little bit more often if that's possible.
I would love to be on more often, Rob. It's always a pleasure. Just let me know.
Okay. Thank you so much. We'll talk to you again.
Thanks, Rob.